Welcome to QAV TK. This is, I think, 815. It's the 15th of April, 2025. What a week, TK. What a week it has been for everybody, really. But let's talk about investors. What a fun week.
Yeah, well, it has been. At least we got some of our money back from the week before in the markets.
Yeah,
so that's good
for now.
Yeah, and I guess more of Trump's grand plan is being revealed, as we spoke about last week. The grift.
Well, we did call it the grift last week, and then he went on Truth Social and said now is a good time to buy, and 2 hours later they announced they were pausing the tariffs.
Yeah.
Like, you can't be much more blatant about the grift than he is being.
Sounds like the New York Stock Exchange is run by the ASX when it comes to corporate governance and disclosures. Yeah.
Well, I'm tempted to, I had stuff back to the US about the moron premium, but we don't have time to do that because you've got a pulled pork to do.
I do, yes. And we have we have any questions, or was that the question to do a pulled pork?
The question was from Trent, will you do a pulled pork on CWP?
Yes, thanks, Trent. And thanks, Trent, because I had this half prepared about a month ago during results season, and we got bumped for other more headline-worthy results. But this was a good result for Cedar Woods Property. It's on the buy list. It's what they do is in the name. It's a property developer. Comes out of WA. It's been going for quite a while now, about 30 years. And they've now sort of over time come into the other parts of Australia, not just the Perth market. So WA is still, I think, about half their business, but they've diversified into other states as well. Listed back in 1994 and was established in 1987. What else can I say about them? Stock price went up following its results announcement last month because they were good results, but has drifted lower recently with all the things going on in the world with share market movements. Massive increase in revenue and profit this half due to a large number of settlements in FY25 versus FY24. And they have the pipeline in place that appears to support this trend to continue. So in the half results, revenue was up 59% and NPAT was up nearly 600%. So big Guinness Book record-breaking results for
record-breaking
to see the Woods Property Group. But yeah, no, good numbers. Record pre-sales, which is one of the important things because that helps fund their developments. Record pre-sales of $640 million as at 31st of December 2024 versus $525 million in the prior period, which is up 22%. So it's all going well for them. A lot of tailwinds in this space at the moment. Even though they're very diversified and play across all areas of property development and all areas of price points, they do have a skew towards first home buyers with house and land packages, with sublot developments on the fringes of urban areas and with building apartments and townhouses. And there is a shortage in that market ever since probably the last 2 or 3 years since COVID. And that's, partly been because it's difficult. There's been less builders in the market, less labour in the market, and also the rise in price. But there's generally depending on who you listen to, a couple of 100,000 house shortfalls in the supply to meet demand in that kind of market. So that's not going to go away soon, and that's shoring up their business to continue doing well over the next couple of years. They are guiding full year NPAT growth of at least 10% for FY25. So that's a good thing. And they're also saying with further profit growth anticipated in FY26. So they're certainly seeing no abatement in this imbalance between supply and demand in the markets they operate in. They're calling out that in most of the states they work in, demand is strong. They're seeing a bit of weakness in Victoria with the state of the property market there, and the economy in general in Victoria is a bit weak compared to the rest of the country. So being a developer with geographic spread is helping them. They currently have 37 projects under development around Australia. So they're about a 400 million market cap. So they've grown a lot since I own these shares a long time ago. I haven't bought them more recently, but I found them of interest a number of years ago, and they were much smaller back then. So they've been growing well. What else can I say about them? They have nearly 10,000 lots to support future earnings. They're in townhouses, apartments, retirement villages, some commercial. So yeah, right across the waterfront, really, in the property space. One of the things that interested me in what they were doing was they're keeping debt under control, which is good, but they're still getting some growth. And one of the ways they've been able to do that is to partner with large companies and pension funds from overseas. So they call it out as a strategy that they're prioritizing. And currently they have some partnerships in place. One with QIC, which is I think it's the Queensland Investment Commission. So large sort of Queensland investment partner there. And the other one is Tokyo Gas Real Estate. Again, another large Japanese investment company in real estate. And they're doing 50-50 joint ventures with them, which enables them to tackle some really big developments, but not have to take on a lot of debt to be able to do that on their own. So it's interesting sort of play, I thought. The other interesting thing I came across on their website is that they offer a shareholder discount. So eligible shareholders may receive 5% discount on land and 2.5% discount on houses, townhouses, apartments, and commercial units and Cedar Woods projects, generally for holding 1,000 shares for 6 months. So if you are in the market as a first home buyer in particular, but I guess any home buyer, you might want to investigate holding some shares for 6 months and getting a discount on one of their offerings. Good company on the QAB numbers front. They're on the buy list. Stock price for this analysis is $5.11, which is less than the consensus target, above IV1 of 321, but less than IV2 of $5.30. Stock Doctor financial health and trend is strong and steady. Stockopedia rank it very highly on the quality side of things, F score of 8 out of 9, and a quality ranking score of 90 out of their list of 100. So that's pretty good. Overall ranking in Stockopedia is 95, and it's probably depressed because they've had some fallback in their share price. So they have a low momentum score of 66 in Stockopedia. So they're basically a Josephine on our list as well. But that comes off the big stock price appreciation following their results announcement. So they have had some strength up until recently. Yield is currently 5.27%, which is less than our cutoff, which is around 6.1%, but it's still a reasonable yield. Net equity per share is $5.60, so we can buy this company at less than book value and also less than net tangible assets. So that's a good thing. On the manually entered data front, PE is just over 8 times, which is the lowest in 3 years. Prop cap is 6.25 times, which is very low. What else? On the manually entered side of things, it has an owner-founder. So a chap by the name of William Hames is a co-founder of Cedar Woods, and by trade is an architect and town planner. Had worked in the US property development market before returning to Australia in 1975 and establishing a company called Hames Charlie Australia, an architectural and town planning consulting company. So the founder's still on the board, still has a cornerstone investment, been around for a long time, which is important in this game because property developers are cyclical businesses. And we score it as having a 1 for an owner-founder. They also have the chair of the company as a substantial shareholder, a guy called Robert Brown. But he joined the board early on, not quite when they first started. So he's not really a founder, even though he's been there for a long time. I think since about 1990. Together they hold nearly a quarter of the stock. So we give it a big tick for that. Doesn't have consistently increasing equity. What else can I say? Prop cap 6.25, I've mentioned. Stock Doctor reports negative forecast earnings per share growth, which seemed to me to contradict what the company CEO said in the results announcement, where he forecasted 10% earnings per share growth. So I can't quite understand why Stock Doctor is saying that. If we put the negative earnings per share forecast growth over the PE ratio, we get a negative, so we give it a -1. So this company's share price, QAV score may actually increase. I think Stock Doctor may change that negative forecast for earnings per share growth with time. And it could just be that there's not many brokers following this company, so someone might get around to updating their forecasts and having it feed into the data sometime soon. So that's that. The QAV all up score, quality is 13 out of 16, which is 81%, and a QAV score of 0.13. Again, a little bit depressed by that negative earnings per share forecast, and that may actually rise to a bit higher. So towards the bottom of our buy list, but still pretty solid, especially on the quality side of things. The risks and positives for this company, it is in a sweet spot for what it's doing now. As I said before, as of the weekend, both political parties are falling over themselves to help first home buyers. If either side is either elected or re-elected, there's going to be even more demand in that market, which will help a company like this. So I see that they're going to do well after the election. And look, what I've seen over the years is that whenever a government does something to help buyers into a market, whatever discount is going or whatever help is going to the home buyer, it ends up in the developer's pocket. Now, I remember back in the days when Jeff Kennett came in and to try and revitalise the building of apartments, he removed stamp duty off new dwellings for a period. And I remember thinking, that's great, because I was in the market for a house back in the 80s and went along to see if I liked the offerings, and basically all the prices had been raised by the amount of the stamp duty discount. So that was pretty evident when you compare them to existing apartments in the market. That may happen again, probably will, in which case Cedar Woods benefits. But property developers do have their risks, even though this one's well managed and has been around for a long time. If there is a general downturn in the economy, if interest rates, if bonds go down and their interest rates go up, those two things will impact negatively. If there are more labour shortages and they struggle to complete contracts, etc., that may have impacts on them. If material costs increase because of tariffs or whatever, somehow that might flow into our market as a cost increase. That will have an impact on them. But I think, given where things are, I think the balance of probabilities is they're going to have tailwinds for a couple of years in this space. My gut feel is if things get out of hand in the US, i.e. there's a recession, that interest rates will come down. There's a bit of pressure on the RBA now to reduce interest rates. Personally, I think they're holding off while the election takes place. And there's a board meeting about a week after the election, which may be their first sort of clear air to drop interest rates without favouring one side of politics over the other during an election campaign. But if there are interest rate cuts, which the market suspects there will be, then that will help Cedar Woods Property as well. So good on you, Trent, for calling this one out. I think it's probably in a sweet spot, and it's got a bit of runway to go to come. So have a look at CWP.
But it's currently a Josephine.
Yeah. And to be fair, I think most stocks are a Josephine now, aren't they? There's been a lot of downturn in the share market in the last week or so, even though it's turned up again. They haven't quite gotten back to where they were.
Yeah. I was buying stuff yesterday, and it was hard finding stuff that was available, but not impossible. All right. Thank you, Tony. All right, buddy.
Thanks
you. Have a good week.
Thanks.